Andy Mantel, who, by the way, is going to start up a new fund in October. That's going to be based mostly in China, right? Your focus will be on China.
Greater China stocks listed globally, yes. So October is the date that we're going to be launching this fund, and looking forward to it. Tough times for the markets, tough times to raise money, but you know, historically, in the last 20 years, there have been 5 stress points for Chinese stocks. On average, they've corrected 47%, and it took about 12 and a half months to do so. So the latest correction for Chinese stocks, the Hong Kong market, is started last November, about 10 months. Hang Seng Index is down about 20%, but if you're looking at the small mid-cap stocks, they're probably down about 50%.
Right, so you think we've hit bottom, is that what you're saying?
Timing is always difficult to call, but you know, what started this was the reverse merger fraud allegations and issues in the U.S., which carried over to here. So the whole sector has been decimated, and we're looking at you know, taking advantage of this. We have investors that want to invest in China on a 5 to 10 year view, and
you need 5 to 10 years, don't you?
Pardon?
You need 5 to 10 years. I was going to say, let's talk also about the global headwinds as well, because I know you invest in China, but I'm sure you watch other market moves as well, what's happening in the U.S., what's happening in Europe. What are your thoughts when investors say, if I'm going to invest into your fund, Andy, tell me about what conditions you're seeing in the economy, global economy right now in global markets?
Yeah, I think there could be more downside locally, you know, regionally for the next couple months. It's going to be hard to say for timing, but what we're looking at are the major holders for Chinese shares right now. There's a few fund managers that have a lot of money in the China markets, and they will be getting more redemptions.
Oh, really? People are that wary right now?
Yeah, of course. I mean, people are wary of what's happening in Europe and the States, and the slowdown in China. Inflation, you know, should moderate by the end of the year. But we're looking at the stocks that are over-owned by the large managers that will be getting redemptions through their various funds. And to take advantage of that, you want to avoid these stocks or perhaps short them if you can. Yeah,
so people are taking money away from funds right now because they want to play safer in the markets. When people ask you about double dip, what's your response?
It could be a double dip globally, but it may not last very long, and I think the China growth will support the global economy, and you know, we're quite optimistic
you think
on that.
China's big enough and growing fast enough to support the global economy?
Even if it goes down to 6% growth rate, that's still, you know, quite strong if you look around the world. So, I mean, looking at 8.5% growth for next year or so, you know, for the China market.
Okay, so there's still money to be made in China. If I invest in your fund, how much can I make in, say, 12 months' time?
Well, I think a lot of these stocks that have been decimated can easily double, triple, quadruple once the dust settles. Looking on a 1 to 2 year view, we're looking at about 20-25% annualized returns for our new fund.
Wow.
Basically, because we're going to be invested substantially at all times. So this is pretty much a long-only fund. Small mid-cap stocks, Greater China related, mostly offshore, not invested in Shanghai or Shenzhen.
Oh, that's interesting. And specifically sectors, where are you looking? Because I know you've had like these small mid-caps in different areas before. Yeah,
well, consumer related, food and agriculture, materials, some properties, pretty much not 1 or 2 sectors. So it's pretty much 25% sector limitation, and we'll probably have about 8% limit on the individual position on the stock.
All right, Andy, thanks for dropping by.